Hello, my name is Saurav Vatva and this is our channel Tax Accountant. Today we like to cover a video on cryptocurrencies. This has been asked by a lot of our clients in the past, and recently one of our viewer has demanded that can we make a video on crypto. So I decided to make one video. Also, there is a link in the description which I have written an article on cryptos. You can go and read yourself on that link as well. Now, cryptocurrencies, it is a fairly new concept. I shouldn't say it's a new concept. It's been around for last so many years now. But in terms of taxation, it's still a new concept. The New Zealand government I'm talking about, where I'm based, have not done much in terms of giving us the guidance, and I personally think they have left it purposely. So they don't want to give us the guidance, and they want to use a general income concept here, and the intention test, they're focusing more onto that. So today I will try to cover the cryptos and the taxation part of it today, and what I think of that IRD view could be if you're dealing in crypto, whether you're a trader or you're an investor, which category you will fall in and how things will work. Now this is just you can go and see ird.govt.nz crypto assets. IRD has some information on there. Now they have clearly mentioned it here. If they change the view, they will change their website, but I got a screenshot as of May 2025. Now they are saying crypto assets are treated as a form of property for tax purposes. Now it's a very important point when they say it's a form of property for tax purposes. They're not talking about financial instruments here. They're talking about a form of property, and we all know that property we do not have capital gain tax in New Zealand, but we do have bright line tax. But we also have an intention test. So IRD always fall back on intention test, that if you have an intention to make money out of it, this is taxable. Now, they also mentioned that crypto assets are not subject to GST when they are bought and sold. So if you are buying, selling, whether through investment or through trader, this is outside of GST net. So GST do not apply on these transactions. However, if you are in a business of making crypto and mining crypto and giving it to the members, that's a separate story altogether. That would come under running a business model, which I presume would be part of a business activity, which is a taxable activity in terms of section 6 of GST Act, taxable activity, and then GST will constitute on that. But this is not I'm trying to cover here. Let's come back to crypto and income tax part of it. So you must be wondering how tax work for Bitcoins and crypto, and how do you define I'm a holder or a trader, and how IRD will assess my activity. So these are the three things I'll try to cover today. Now remember one thing, this is not a currency. So crypto is not a currency, and it's neither a financial arrangements, right? This is subject to income tax when intention is profit. Very important point, when intention is profit, and this is not subject to GST generally. I would like to cover more onto when intention is profit. Now this is again on the IRD website, and this is, I got it from here. Now crypto assets are cryptographically secured digital representation of value that can be transferred, stored, or traded electronically. They use form of distributed ledger technology such as blockchain. So this is, I just got this from their website. Cryptocurrencies, cryptographic assets, digital financial assets, digital token, or virtual currencies. So this could be the crypto. Now key determining factors would be, as I said, the intention. So intention, let's dig into it. How could be determining factor for the intentions? Intentions could be, what is the purpose of acquisition? So when you acquired it, what was the purpose behind it? You must have some purpose, and if purpose is to make money out of it, of course, then it would be subject to income tax. Again, this is a subjective test. What is, you will always say, this is not my purpose, there is my purpose. So there are more factors will be underlying to that. Pattern of activity, how much pattern of activity has been there, what is your knowledge and expertise, are you in that field, do you understand that better, time frame between buying and selling, right, and the use of crypto assets, have you used it somewhere to buy something, to use it somewhere or not. Now intention is a key. Was crypto bought to sell at a gain? IRD sees speculative purpose as taxable. So again, remember one thing, crypto has no passive return such as shares. So when you go and buy some shares in Skycity or anywhere, you will get some dividend out of it. And underlying assets are the assets of the company. Could be plant and machinery, land and building, intangible assets, patents, brands, goodwill, closing stock. Lot of assets are underlying assets. But in crypto, there is no underlying assets. The sole purpose of buying crypto would be one day it's going to go up in value. That's the reason you invested money there. And there is no underlying assets there either. So there is no passive income. So it will be very hard for a taxpayer to argue that my intention was not to make money out of it. And it would be very easy for IRD to say that your intention was to make profit. So generally they have mentioned on their website that generally this is taxable. But again, they cannot put into black and white that this is always taxable. I'll tell you a reason why they can't do that. Now this is, as I said, it's a subjective test, but these things can you look at and can IRD look at. So when you are doing your own record keeping, so you have to see regular trading activity is equal to trader. That's simple, right? Financial background, what's sort of it, short-term flits versus long-term holding. So you got to do the analysis yourself. If you can't, then get a good accountant who understand crypto and the trading pattern and those sort of stuff, who has experience working with the IRD on those sort of stuff. Onus of proof, this is very important point. There has been many cases in the past, and always the court has ruled that the onus of proof lies on the taxpayer. So IRD can or any tax department in any part of the world, they can make their own assessment, but to prove them wrong and to prove them otherwise, it has to come back to taxpayer. Now how taxpayer do the presentation back to them. So very important point, onus of proof come to you. Now what can you do to have onus of proof? So these things I think you should have it handy. Transaction dates, asset types and quantities, value converted back into the local currency, nature of transaction, buy, sell, swap, what have you done. So it has to be itemized on a daily basis, like on what date what happened, what fees, wallet addresses, exchanges. So need to have those sort of information available and handy. This could be downloaded through the platform that you're using, could be Binance or any platform that you're using. Just download all the data so that you have handy available to you, and keep downloading in regular basis, because the historical data, they might not allow you, they might charge you more money for that. Different platforms have different fees attached to it. So but you can build up your own stuff here. Now IRD, this is evolving guidance onto this. IRD has no strict rules as of now, but they have given this email cryptocurrency at ird.gov.nz that can be contacted, but I don't think it will be very useful to contact them and get a lot of information from them, as they might have their own view on that on intention test. Now again, self-assessment is still required here. So the reason I was telling you the rules, they have left it wider, not narrower, and this is just my understanding of that, is if they say all crypto are taxable, regardless of you make money or you make a loss. Then a lot of people lose money in crypto too. So if you lose money in crypto, people will start putting that as tax losses. And if you are in employment earning 200,000 a year, you might have paid $50,000-$60,000 tax on that income. And if you lose 100,000 in 1 year in crypto, and you say, look, I lost all that money, now give me my tax back through my employment income, because this is my tax loss through business activity. Now IRD will have to return significant portion of tax already paid. So again, they will be in problem. If they make this a black and white, then there could be some money and tax issues there come down to. I'm not an expert, and I do not do treasury forecast, and I'm not part of their team, so I do not know the understanding and reasoning behind all that. But this is just my understanding that they might have some issues down the line if they narrow it down and make it very strict. That's why they left it open, so that people can do their own assessment and IRD can do case by case basis. As of now, and things can change in future, which I do not know, but as of now, they left it case by case analysis and do and work with those taxpayers as they get along. And again, to summarize what you need to know, crypto is taxable if intention is to profit, as I have already explained. Intention will always be to make profit. You have to prove otherwise. No GST unless part of GST registered activity. Again, this is a very big topic. For that, I might need a new video on that. And good records are essential. Whatever you're doing has to be a record keeping. If you do not know what to do, I suggest you have a good record keeping, understand your tax position, and seek help. Seek help from some expert who understand this better, so that they can guide you in a better way. Look, if you need our help, we're always here, happy to assist you. And thanks for watching this video. If you like it, please comment and share with your friends, and subscribe to my channel. Thank you very much.